Good afternoon, grade 12 learners. I am Mrs. Andrews, and this afternoon we're going to talk about all things stock. Stock is a topic that forms part of your paper 2, but it can also be asked in paper 1. Normally, as part of the income statement, where you have to calculate the trading stock deficit or the trading stock loss, trading stock surplus, or in the balance sheet or statement of comprehensive income or your statement of financial position, where you have to calculate also the value of your stock. But so in paper 1, it can be asked for about 5 or so marks, but in paper 2, it is a whole 35 or 45 mark question. Now this question, you can easily get marks here, but unfortunately, we often don't understand the concept of FIFO weighted average or specific identification to be able to get those marks. So this afternoon, I'm hoping to clear up any concerns that you have about inventory and hoping to address some of your issues so that you can better understand this topic. Now let's look at my presentation. Inventory systems. In most businesses, the inventory of the unsold goods is one of their largest, most valuable current assets. A business buys the inventory in order to sell it again. They want to make money, right? Sometimes people always ask, what's the difference if you have a car or a vehicle? When is that car a non-current asset and when is that car a current asset? So basically, when does it form part of your fixed assets or when does it become a current asset? That same car, if you buy that car so that you can use it in your business as part of your operating activities daily, then it forms part of your non-current assets because you don't want to sell that car. But if you are a car sales place and you want to sell that car, then it forms part of your stock. Now, because we buy the stock so that we can sell it, the management of the control of the stock becomes very important because we're talking here about your working capital. Okay, we're talking about valuation of stock. We have two stock systems. We have the perpetual inventory stock system and we have the periodic inventory stock system. Now, what is the difference between these two? When you started with your accounting in grade 8 and grade 9 and grade 10, and you started with your journals, your cash receipts journal, mainly I'm talking about now, or your debtors journal. When you had sales, you always had cost of sales, cost of sales, which means after each and every sales transaction, you recorded your cost of sales. At the end of the month, you would post that sales to the general ledger, cost of sales to the general ledger. So at all times, you could accurately say that the value of my stock in my business is, say, for example, 90,000, right? So you knew the value. That is what we call the perpetual inventory system. After each and every sales transaction, you recorded your cost of sales. Then at the end of the financial year, you do a physical stock taking just to verify our own stock records. Because remember, stuff could go missing. Items can go broken. I'm sure you've walked in a store and then by accident you bumped off a bottle of tomato sauce. You broke it, right? It's not sold, which means it's not recorded. Right. So only at the end of the year when you do your physical stock taking, then you pick up that some of the items went missing, some was broken and so on, right? Unless they have a very good system and they record immediately that bottle of tomato sauce was broken, right? So perpetual inventory system, you calculate the cost of sales after each and every sales transaction, right? Then we have the periodic inventory system. In the periodic inventory system, you buy the stock all the time. You record the purchases of, we're now talking about purchases of stock. but only at the end of the financial year do you calculate the cost of sales, right? And that's where the valuation methods comes in, because now you must calculate the value of that stock at the end of the year, right? So you must know the difference between the perpetual and the periodic inventory system. That's often a short question that's asked to you. And like I said, the main difference between the two that will get you 1 mark or maybe 2 marks is in the calculation of the cost of sales. Perpetual inventory calculates the cost of sales after each and every sales transaction, and in the periodic inventory system, you only calculate it after a certain period. It can maybe be after 6 months if you want to do the financial statements, after 6 months or after 12 months. For our purposes, it's normally after 12 months. It can even be up to 9 months, depending on the information that you are given. Now let's look at this valuation methods. So far, you've been introduced to 3 stock valuation methods, so 3 that we use for the purpose of our syllabus. The first one is first in, first out, or FIFO as we know it. Then we have weighted average and we have specific identification. Now, what is first in, first out? First in, first out means you assume that the stock that was bought first would be sold first. So if we bought stock in January, you do not expect that stock to still be there. So you will not work on the January price, you work on the April price that you paid for the stock, because you assume that stock that was bought first was sold already, right? That's why I said when you do the calculation of FIFO, you don't look at the January stock, you start with your last purchase. We say we do the bottom up, because I cannot go to my first stock, because my first stock, according to my assumption here, means that stock must have been sold. If you are in December and you still have January stock in your business, it means you are not doing well. You are not selling the stock that you're supposed to buy. So if I bought stock in January, in April, in November, and December, where will I start my FIFO calculation? I started in December with the December stock, right? And the December cost price of that stock. So I don't even want you to touch January when you do your calculation. But we will go into that some more now. Weighted average, learn the formula. Above your line, your numerator, your opening stock. Below the line, the units associated with your opening stock. Above, plus your purchases. Below your line, the units of purchases, right? Minus your returns, rand values above the line, units below the line. Minus plus your carriage on purchases, right? Either given to you or you have to calculate. Know that calculation. If you know your weighted average calculation, that can be easy 4 or 5 marks for you. But often you don't even know. If they say to you, FIFO, what calculation to use? You must know. If I want FIFO, this is how I calculate FIFO. If I want weighted average, this is how I calculate weighted average. And then we come to specific identification. Not a difficult calculation, but often not well treated, so we don't understand it, see it maybe for the first time in the exam, right? So specific identification is normally for high value items, right? Where you want the individual prices, right? Like say, for example, TVs. You have Samsung TVs and you have LG TVs, and it's 72 centimeter and it's 42 centimeter. So they will all have their individual prices. So when you look at your specific identification, you will also take your opening stock plus your purchases, minus your returns, minus your items that were sold, and that will give you your stock on hand. The stock on hand, then times the cost price, will give you the value of your specific identification, right? So I always say, remember your opening stock, even if there's nothing, learn it like that, so that you do, whenever there's opening stock, you know, I must take my opening stock into account, right? Other considerations, internal control and missing stock. For missing stock, I said to you, we do the cost of sales calculation here, right? Just move to the next one. We do the cost of sales calculation here. The cost of sales calculation says opening stock plus purchases minus returns plus your carriage minus your closing stock. That gives you your cost of sales. Learn that formula. That formula will get you out of a lot of trouble in this inventory chapter, right? If you know that formula, you can calculate your missing stock. It will help you with your weighted average calculation. It will help you with your specific identification calculation even, right? Let's look at this slide quickly. Perpetual, generally trading inventory as individual, easily recognizable items. The cost price is determined at the point of sale. That's what I said to you. It's recorded in the trading stock account and the cost of sales account. You are familiar with those two accounts because that's how we used to do it in grade 10, 8, 9, and 10, even 11, until we introduced the periodic inventory system to you. So it's not a totally different system. It's just a different way of doing it. A stock count is performed to validate stock records and to determine losses. Remember what I said to you about the tomato sauce? We cannot pick it up early. We normally pick it up when we do the physical stock taking. That so many items were lost during the year, right? Periodic inventory, generally trading in large volume, low value goods, not always practical or feasible to update stock records and cost of sales on a continuous basis. What does that mean? Let's look at tins of baked beans, for example. If you go to ShopRite, or let's say to Macro, I know Macro, you can normally see what's happening there in the stores. You see bulk items of tins of baked beans. How much is a tin of baked beans? 15 rand. Is it, if you want to, and you sell a lot of baked beans in 1 month. I know people like baked beans. I also like baked beans, right? You sell a lot of items of baked beans. So it is not possible or feasible to update your stock records all the time as you go on. So we buy the baked beans, we record the baked beans as we sell them, and only at the end of the financial year, we will do the cost of sales calculation, right? Then they say a physical stock take, usually at the end of the counting period, is necessary to establish the closing stock value. And that is, like I said to you, where your FIFO, your specific identification, and your weighted average comes in, right? Then you must calculate your cost of sales. Okay. We talked about first in, first out, your specific identification. Just go over it again. First in, first out, large numbers of inventory which are similar or interchangeable, based on the assumption that the first units acquired are the first units sold. Cost of sales is represented by the earliest purchases. Closing stock is represented by the latest purchases. Why are we going over this again? Because the first 4 marks in every question is normally a little icebreaker question, an easy appetizer for you. Then you must know these concepts, because if they ask you, like in our question that I'm going to give you today, 4 marks for us knowing these things, right? Weighted average, low cost, similar value goods. The average cost is applied after every movement of stock. That this method evens out the effect price or cost fluctuations. Specific identification. Thus, similar items of inventory or uniquely identifiable products. Now, if you look at VW, for example, and the cars, you have a Polo and then you have a Tiguan, right? Tiguan is more expensive than Polo. Can you just make an average price for those 2 cars and say, I bought one at 400,000, I bought the other one at 800,000, therefore the value of my stock is 600,000. Can I say that? No, because they have their own prices. So you will look at Polo and say, I have 4 Polos of 400,000, right? So 4 times 4 would be 16, right? And then I have 2 Tiguans of 800,000, so that will be 1.6, and the other one, let's say also 1.6. So my value of my stock, you add the 2, it will be 3.2, right? So that's how you have to calculate it. Cost of sales closing stock balance relates to the cost of the specific unit sold or in stock. Okay. General questions that can be asked in inventory. Calculations, right? The first thing they normally ask you is use FIFO, weighted average, or specific identification to calculate the value of your closing stock. Then you do that. Then the second thing they will ask you is calculate the cost of sales. Now remember, in 1.1, you calculated the value of your closing stock. Now you must use that value of your closing stock in your calculation of your cost of sales. What did I say? You must know this cost of sales calculation. Your opening stock plus your purchases minus your returns plus your carriage on purchases. Now you get up to that point. That's when you have to bring in the value of the closing stock that you've calculated using one of the stock valuation methods that they ask you for. Then you bring it down and you put it and you subtract it. And then you get your cost of sales. Once you've calculated your cost of sales, they can now next ask you to calculate the gross profit. How do we calculate the gross profit? Sales minus cost of sales. Sales would either be given to you or they will say to you, so many units were sold at this price, then you have to calculate it. And remember, in the previous question, you calculated your cost of sales. So you must now bring your cost of sales down. Why is this so important that you bring that same amount of cost of sales down? Because even right or wrong, remember you are in the test or in the exam or in your classroom book, you don't know if your answer is right or wrong. You bring your right or wrong answer all the way down with you and you're going to get at least 2 out of the 4 marks, right? For bringing down your answer right or wrong and then using your answer as part of the correct calculation, right? So you've applied, we call that a method mark for applying the correct concept, right? So now we are on the gross profit, sales minus cost of sales. Sales minus cost of sales gives you your gross profit. Another question they can ask you is your missing stock items, right? To get to the missing stock items, just say your cost of sales calculation in your head. Then you're also going to apply it here, right? So now we will say our opening stock plus your purchases minus your returns minus the stock sold. You bring in your stock sold here. Then you are left with stock on hand, right? Now you compare your stock on hand, or you can even subtract your stock on hand. Then it will give you, if it gives you 0, it means nothing is missing. But if it gives you 10 or 20, it will say that some 20 units of stock is missing. Let's go over that one again. Missing stock items. Learn the calculation. You're working with units here, right? It's always easier to work with your units. Missing stock, opening stock, units, plus your purchases, your units, minus your returns, minus your units sold, minus your stock on hand. That gives you the missing stock. In the recent years, when they ask this question, they will say calculate the rand value of your missing stock, which means you must now times that missing stock. If you did a weighted average calculation somewhere, you must times that, let's say 20 units. You've calculated 20 units were stolen. Then that 20 units must be multiplied by the weighted average that you calculated in another question, in another section of the same question, right? Remember that. Because often when we do missing stock items, I've seen it, I think it's the last paper that we had, or last year sometime, where they ask the learners, calculate the rand value. Then you only get up to the point of the units. You do not calculate the rand value, which means you then only get, let's say, 4 out of a possible 5, not because you didn't know, but because you didn't read properly. So read and see, do they want the units or the number, which means you must give them the units. Or do they want the rand value? If they want the rand value, you're going to times that stock items, the missing items, 20 of them, times the weighted average that you've calculated, or times let's say if it's FIFO, times the cost price of that time, or if it's specific identification, times the cost price that's given for that specific item, right? It's quite a mouthful. Relevant financial indicators that we have as part of this question: your stock holding period, your stock turnover rate, and the markup percentage. Make sure that you know these calculations, because they ask you this and all the information is given. All you need to do is know that a stock turnover rate is my cost of sales over my average stock, right? Markup percentage, how do you calculate your markup percentage? Your gross profit over your cost of sales. Know that it's somewhere in this question, or it is given to you in the information, right? Interpretive questions, your relevant GAR principles and your concepts. Know that your internal controls and missing stock. Remember, I said to you when I introduced this topic that stock is an important asset for us in the business. The reason for that, we buy the stock so that we can sell it and make more money, right? So we need to make sure that we safeguard our stock. So a question that they like to ask on internal control is: so many items went missing. What must you do to ensure that stock doesn't go missing? So you must look at things, look around you, what's happening at stores at the moment. If you go to a store like Truett's, they have those turnstiles there, where if you steal the items, I'm not saying go and steal the items now to test it out, but if somebody steals it, who wants to steal it, then if they go out of the store, or let's not say somebody's stealing it, sometimes the cashiers did not take off those tags on the clothes, right? It happened to me also. They didn't take off the tag. So when I walk through those, I've paid, I have my slip, everything in my hands, and I walk through those things, then it sounds do 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 do, because that tags on the clothes is there to prevent the theft of the clothes, right? So that's an internal control measure put in place so that the items of stock do not go missing. I've seen, for example, at some stores like Spa and Clicks, they put expensive toiletries. Then they only put the boxes on the shelves. So if you want to buy maybe an aftershave or a perfume, then you take the empty box, you pay for it, you take it to the front counter, and they will then place the item in the stock. Why do they do that? To prevent the theft of their stock. I've also seen at Clicks, for example, their perfumes are behind glasses and locked away. Why? It's so that they can prevent the theft of their stock, because I've seen how easy it is to steal the perfume products. Remember, you might, as a lady, we sometimes walk with perfume products in our bags. We walk with lipstick in our bags, right? Guys don't do that so much. But so if I go in there, take something and say it's my own thing, it's very difficult to prove that it's not my own thing if I come in there with my own lipstick in my bag and so on. So they put all these things in place so that they can safeguard their asset, namely their stock. Okay, we are back again. Let's look at this question. And I really want us to take our time to work through this question. But before I start with this question, remember I said to you, the first part of every question is normally a little appetizer, easy little question. And the question is, where do you get these answers? These answers comes from understanding these concepts. And that's why I took my time to explain the concepts to you so that you don't lose out on these 4 marks. That's supposed to be easy, but sometimes we don't even get these easy marks. And please, if you have, let's see how many options we have. 1, 2, 3, 4, 5 options. So you have a 20% chance of getting something right if you put some answer there. Do not leave empty spaces. If you don't know, do the ones that you know and the other one that you are sure of. Let's say I'm sure of two answers. Then the other two, I will take any concepts there that I think could possibly be the answer, right? If you have taken two already, which means now you're on a 50% chance of being right. But if you just leave out the answer, who can give you a mark if there's nothing written? And that's what you do in all your questions. You just leave out answers. Do not leave empty spaces on your question paper. Because I always say to teachers, if I give a mark on an empty space, it means I am doing corruption, right? Because there's nothing written there. But if I mark a wrong answer, maybe right. That could be my understanding. Maybe I read more into what you are trying to say. Or I have mercy and I'm trying to think this is surely what the child is trying to say. But when there's nothing written on your question paper, then I cannot help you, because when the minute I make a tick and there's nothing written, it means that I'm doing corruption. I'm trying to give you something that you don't deserve. So I'm just asking, do not leave empty spaces on your question paper, right? Now look at it. Give one term for each of the following descriptions by choosing a term from the list below. Write only the term next to the question number in the answer book, right? First in, first out, weighted average, specific identification, periodic inventory system, and perpetual inventory system. Now I've explained all those concepts. Now you have a better idea of the answers, right? Now I know you don't have the answer book here, but I'm going to ask you a lot to work with me here. Think of it, then you test yourself when I give you the answer. Cost of sales is recorded after every sales transaction. So what would be your answer? The correct answer would be perpetual inventory system. 3.1.2, this method of stock valuation assigns a unique or individual value to each stock item. Unique or individual value to each stock item. What would you say is your answer there for that one? Give you a second. My answer would be specific identification. This 3.1.3, the stock valuation method is best suited for smaller items purchased in large quantities, where prices remain fairly constant for items purchased. What is your answer there? My answer would be weighted average method, right? 3.1.4, this method assumes that stock is valuated at the latest price. Your answer? My answer would be FIFO. So let's just go back. Number 3.1.1, perpetual inventory system. 3.1.2, specific identification system. 3.1.3, weighted average. And 3.1.4, FIFO. This method assumes that stock is valuated at the latest price. Now you see, when you understand the concepts, it becomes easier to answer these type of questions, right? Now with the last one that says FIFO, I want us to quickly jump into a little calculation before we go on to FIFO. I said 150 rands that was bought in January. Then I said 200 at 75 rands that was bought in November. Then 350 at 90 rands. That's my information that I'm giving to you. My own example to explain FIFO. Right. Now, the first thing that I'm saying to you, I have 300 units on hand. It's now the end of the year. You have your question paper in front of you. They say to you, you have 300 units on hand. Calculate using my information the value of my closing stock here with 300 units. Can you work with me here? Do it on your own calculators. I'm going to give you a minute to do that quickly. And then you'll check my answer, right? So you have 300 units on hand. This is the information that I gave you. 100 units at 50 rands for January, 200 units at 75 rands that was bought in November, and 350 units at 90 rands that was bought in December. That's your stock purchases for the year. Now I'm telling you, you have 300 units on hand. Calculate the value of your closing stock using FIFO. I'm giving you 2 minutes. Okay, your time is up. If you still did not get the answer now, so stop writing now and look at the board now again. 300 times 3. Remember I said FIFO, we work from the bottom up. So I assume if I have 300 units, it must come from the December stock because January stock is sold, November stock is sold. That 300 will come out of December. So 300 times 90 gives me 27,000. Well done if you got 27,000. If you did not get 27,000, it means that we still don't understand this concept very well. I'm going to give you another one to do for me now. Now I have 400 units on hand. I have 400 units on hand using the same information, the 100 units at 50 rands for January, the 200 at 75 rands for November, and the 350 times 90 for December. Now I'm saying to you, I have 400 units on hand. Using FIFO, calculate the value of my closing stock. I'm giving you 2 minutes again to do that for me. Okay. The first answer was 27,000. The second one, I'm saying to you, I have 400 units on hand. Calculate the value of closing stock. I'm giving you 2 minutes again. Teachers, if you are with me, just check on the learners' calculators to see what the answer is. The correct answer should be 35,250. Learners, if you have the correct answer, raise your calculator so your teacher can see what's happening there. If you don't have it, all of you, let's pay attention to the board again. Let's look at it. I said FIFO, you start from the bottom up. How many units can I take out of the December stock? Only 350. I cannot take all 400 because I only bought 350. Then I'm going to say 350 cost price 90 equals to 31,000. 31,500. I'll fix that now. Razor. Razor back. 31,500, right, is the first answer. Now I'm going to say 400 minus 350. 400 minus 350 gives me 50. 50. Where will I get this 50? I will now go to the November stock to get 50 more units, which means I must use the November cost price for that 50, right? It can't be. If you said 400 times 90, it can't be 400 times 90 because you do not have 400 units in the December batch. You can only take 350. You can't take more than what you have in that particular batch at that particular cost price, right? So I'm going to take it from the November batch. Then I'm going to say 50 times 75. And it will give me 3,750. And then you add the 2 and it gives you 35,250. Okay. Now I'm going to add something more. I hope you all got that by now, right? This is all that they want in the exam for about 5 marks or maybe 6 marks, right? That's all they want. This complicated calculations that you guys doing is not necessary. That's all you have to do. I'm going to put a little twist in this now, right? I'm going to say to you, from the December stock, 50 units were returned, right? So returns, remember this is made up, returns 50 units. Okay, so from the December stock, 50 units were returned. Now, my third one, I want you again to calculate for 400 units. Same 400, but now you must take into account that 50 units were returned from the December stock. I'm going to give you 2 minutes to do that calculation then as well for me, right? So now, still 400 units on hand, but you must take into account that 50 units were returned from the December stock. Do the calculation for me. I'm giving you 2 minutes again to do that calculation. So 400 units were returned, 400 units on hand and 50 units from the December stock was returned, right? So use that information to do the calculation for me using FIFO. Giving you 2 minutes again. Let's go over it again. We said 400 units and then I split it up 350 into 50 and 50, right? Where did I get this 50? 400 minus 350 gave me 400 minus 350 gave me 50. Now the 350 I could take from my December stock because I had 350 in there, right? And then the cost price remains 90. So 350 times 90 gives me 31,500. Then I said 400 minus 350 and it gave me 50. Times 75, it gives me 3,750. Then I add the 2 to give me 35,250. Then I added more information for you. I said returns on the December batch was 50 units, right? That's more extra information I'm giving you now. Now the question is, do you still have 350 in the December batch? Think about that. I'm not answering yet. And then I said, use the same 400 and now calculate the value of your stock using FIFO with my information. Remember, we're only working on my example now, on my information. So calculate for 400 units the value of my closing stock, bearing in mind that 50 units was returned from the December stock. And I said you had 2 minutes to calculate that. Remember, we start with the bottom up. So the question here is, how many units do I have in the December batch? Do I still have 350? No, I have 300. How did I get to 300? 350 minus 50. Remember, I returned. And this is the tricky part with FIFO that you guys sometimes forget. You forget to include those, to exclude the returns. Then your calculation is wrong. So remember, when they give you this calculation, most of the time they give you returns. Then you first have to subtract the returns from the month where it happened. If I had returns in January, it would make no difference to me, right? Even returns in November will not affect my calculation. But the return in December affects my calculation because now instead of having 350, I only have 300. Then I must say 300 at the 90 rands. Cost price always stays the same. It cannot change. Then it's 27,000, right? Then I must say 400 minus 300 and it gives me 100. Where will I get that 100? I must get it from the November stock. So 100 times 75 gives me 7,500. And that to add it together gives me 34,500. 500. Okay, so what did I add in this one? I added returns, né? Because returns is the one thing that you forget. So if you see returns, write it there next to the month. You will read returns in the additional information, right? Then you go and take it onto the table and you place it next to the month where it happened. Because like I said, if it was January, it would not affect us. November would not affect us, but December is most definitely going to affect you because then there's not enough units in that December for you to calculate, right? Now, that's the one important point that you guys must remember because you forget it. The last thing I'm going to add here is carriage on purchases. If they say to you carriage on the items that we bought, let's say carriage was 1 rand on our items, right? Whenever we order, we pay 1 rand. It means I will have to add a further 400 rands. Why am I adding 400 rands? Because I have 400 units on hand and the carriage must only be for the 400 items, right? So I'm adding 400 rand here. What is this for? Carriage. Remember I said to you, carriage is 1 rand, right? So it would be 1 rand times 400 rand to give me my 400, right? Okay, here we're back again. So it's 1 rand times 400 rands to give me a carriage of 400. Then I add that carriage to my calculation and my answer would be 34,900. So remember, if there's carriage, then you must add it because carriage increase the value of your stock, right? We include it in our price, right? So carriage of 1 rand, like in my example, 400 must be added. Sometimes they will say 10%, then 10%, then your goods will be, let's say if the goods are 90 rands, 10% of 90 rands would be 9 rands. Then my price would be 99 rands. So you can either include your carriage here or you do a separate calculation for the carriage. Okay, but do not neglect or forget about the carriage. Include it in your calculation. I hope that helped you a little bit. If not, let's look at the question, then we can further unpack this a little bit, right? There we go. What did we learn from that one? We start with the bottom up. You start with your very, very last month. Do not look at your first month. Start at the last month. Then you go to the second last month and so on, right? You will normally, you can sometimes work over 2 months, but not 3, 4 months, right? But it's not impossible. So go as far until you've made up your 400 units. Your goal is to make up the units that you have on hand, taking it from the stock that you bought, starting with the last batch. Let's look at this question quickly. Rory Sang Sports Shop sells sports equipment. The owner, Penelope, has provided the information relating to certain products for the year ended 28 February 2025. Required cricket bets. Calculate the following for cricket bets. The value of closing stock of the cricket bets on 28 February using the FIFO method. Now remember what we said, we need the closing stock, the number of closing stock, and then we need all our information, right? I'm also going to calculate the cost of sales on 28 February, and then 10 bags got stolen during the year. Penelope already installed cameras and implemented division of duties. Look at this one. Okay, I can't underline, but it says Penelope already installed cameras. If they say Penelope already installed cameras, which means Penelope already made the plan of cameras. Can you now in your answer again cameras? It cannot be accepted because they're telling you then that cameras have been installed in the business. Now you're coming up with plans, but cameras is your plan. Camera is not your plan. Camera is on the question paper and it must not be on your answer book. Are we clear on that one? Provide two other specific control measures she could introduce to ensure better control over stock. So I'm just going to read that part and now we're going to look at the information so that you can calculate with me. Yeah. Here's our information on cricket bets. Let's not focus on hockey balls now. We'll read that part again. We only focus on cricket bets, right? B is also on hockey balls, so we don't need that. We only need information A, right? So, stock on hand, stock available, closing stock for cricket bets is 235 units. Closing stock for cricket bets is 235 units. Can I give you 2 minutes, 3 minutes? Let me give you 3 minutes to do this calculation for me. Where do you start your calculation? You start in February. Did we have returns for cricket bets? No. So you can work with the information that's given to you. Do you have enough units in February to only work with February? No, which means you also have to consider November, right, for this one. So closing stock is 235. Your goal is to make up that 235. I'm giving you 3 minutes, then you can quickly do it for me. Remember, where's your starting point? February. Is there enough in February? No. Where do you go to after that? November. Take what you need out of November. The cost prices remains the same. So if you take from February, you work with the February cost price. If you take from November, you work with the November cost price. Do we see anything on carriage for cricket bets? No. So we don't have carriage, we don't have returns. This is a straightforward calculation. Put your 235 on your paper, make up your 235 and give me that answer. I'm giving you 3 minutes for this one. Okay, your time is up. I'm going to start with the correct answer here. The reason why I want you to check yourself. Is that the answer you got? Well done. If not, let's look at why you did not get that answer, right? Remember in the February batch, there was 200. Your goal is to make up 235, né? But in the February batch, there was only 200, right? So 235 minus 200 gives me 35. Then I have my 235, right? The 200 will come out of the February batch and the cost price there is 2,175. So 200 times 2,175 gives me 435,000. Then 35 will come from the November batch at 1,950. 1,950 times 35 gives me 68,250. Then I take my 435 plus 68,250 and it gives me 503,250, right? Examiner's very stingy here with this one. So then I get my 3 marks, right? If there was a return here, the return would affect most likely my 200 rands, my 200 units here, right? But there was no return. It was a straightforward question that you should have gotten 3 marks for, right? The next one is calculate my cost of sales. What did I say? What is the cost of sales calculation? Okay, cost of sales calculation. What is the formula that I said to you? I need my opening stock plus my purchases minus my returns minus my closing stock that I've calculated. Here is your information for cricket bets. What did I say? We need opening stock. Do you see opening stock? Write it down. You see purchases? Write it down. Opening stock plus purchases. We do not have returns, so we don't have to subtract returns, but always put it in your head because the next calculation might have returns, right? And then minus the closing stock that you have just calculated. Now, I have given you the answer of 503,250. Maybe some of you got that answer yourselves, right? But I want you to use your answer, whatever your answer was, and bring it down into your calculation, right? Opening stock was 319,000. 319,000 plus your purchases of 1,689,750 minus that figure that you have over there. And why do I say use your answer? Because if you bring your answer right or wrong down into this calculation, then you will get 4 out of 4 for your mark, for this calculation, right? So that's why I said write your own answer. My answer is now correct at 503,250. But I want you to learn to bring down your own answer so that you can get this, what we call a method mark for that calculation, right? And the correct answer is then 1,505,500. Okay. All right, let's look at the next question. Then we can be done with the cricket bets. 10 cricket bets got stolen during the year. Penelope already installed cameras and implemented division of duties, which means we cannot use cameras and we cannot say division of duties, right? So we have to give 2 other specific control measures she could introduce to ensure better control over stock. Okay. So remember I talked about the exit points in stores at Truett's where they put these tags on and then they have those turnstiles. Mention those things. It's real life relevant answers that you can use, right? So our first answer could be improve physical security at exit or delivery points, installation of the tracking or security tags. You see relevant things that's out there. So when you go to shops, look around. What are they doing to ensure that they safeguard their stock in the business? And then you bring it to your exam. They will really give you marks if you bring those relevant answers, right? Have regular physical stock count and compare with your records. So the first one, physical security. Physical security. Increase that at exit points. Exit points. And another one, physical stock taking. Regular physical stock taking, right? Okay. Limit access to your storeroom. Those are just a few. When you go into the exam room, then go with these answers in your head already, right? That you know if they ask me about internal control on my stock, that I can say increase the physical security, do regular stock taking, limit access to the storeroom, all right? Or only have limited people going, only the supervisor can go into the storeroom where we keep the stock, okay? Lock away your stock items, okay? That was the first part of this question. We are now going to the second part of this question that deals with weighted average, right? I hope you all still with me here. Okay, let's read the part on hockey balls now. Hockey balls. Calculate the following for hockey balls. The value of the closing stock on 28 February using the weighted average method. Remember, the first one that we did was FIFO. Now the second one we're going to do is weighted average. In every question, most of the time now, they ask you two stock valuation methods, right? And normally if they ask, let's say, FIFO in paper 1, then in paper 2, you'll see weighted and specific identification, right? Could be like that. Or maybe they'll ask both of them, but they don't like repeating the same stock valuation in the other two papers, right? In that paper 2. So, weighted average. I said to you earlier, is the formula. If you know that formula, for 5 marks, you can get this 5 marks just by knowing the formula. What did I say? Opening stock, rand values above the line and units below the line, right? So if I look for opening stock, then I look for the units of opening stock, rand value and units. Then I'm looking for purchases, rand value and units. Then I'm looking for returns, rand value and units, right? Then I'm looking for carriage. We know this carriage is on the purchases, so there's no units there that I can further add or subtract here, right? That's your basic calculation for weighted average. You have that in your head, and then we look for our information, right? Then the stock turnover rate for 2025. What is the formula for stock turnover rate? Formula for stock turnover rate, your cost of sales over your average stock. So we're first going to calculate there. Then we have to comment on whether the stock turnover rate is acceptable for this business or not. To comment on the stock turnover rate, you must look at the product that we are selling, right? Also, if we do stock holding period, we look at the actual product to see if we are, say, selling tomatoes and we have tomatoes for 6 months in stock. Is that good for the tomato? The tomatoes won't even last 6 months in the business, right? Then you can say, no, the tomatoes will go rotten. So the stock turnover, the stock holding period is too long. Or if my stock turnover rate for tomatoes is 2 times in a year, if I only sell the tomatoes out 2 times, I will make losses because the tomatoes will go rotten. So you must look at the actual product when you comment on the stock turnover rate or the stock holding in a business. What kind of product is this? Sometimes they talk about shelf life of a product, and they say to you the shelf life of this I think it was a fitness product that they once talked about, is let's say 50 days. Now, if you have a stock turnover rate, let's say 7 times, maybe 7 times 50 will maybe get us through the year, okay, or not. So you must look at the actual product to see whether this stock turnover rate is good or not for that product, right? Explain why the weighted average method is best suited for this product. Once again, we're looking at the product. What is a hockey ball? Hockey ball can all look the same more or less, right? I'm sure you have different types of hockey ball, but the price range of the hockey ball are more or less the same. And you can buy a lot of hockey balls. So you think in that line when you answer your weighted average question, right? I'm going to give you 5 minutes to do the closing stock for me using the weighted average method. Let's look at our information that we have. In A, we have hockey balls, right? There is our opening stock. We bought rand value 39,180 and the units was 640. Our purchases was 174,300. The units was 1,850. There we have returns. They even gave it to you, 36,000, and the units was 300 units, right? In B, they talk about import duties on purchases of hockey balls during February 2025 amounted to 24,000. Import duties, carriage on purchases must be added. So that 24,000 will be added to our calculation. It's just on purchases of hockey balls. So it's not linked to a specific unit. So there's no units here associated with this one. Do the calculation for me, right? I'm going over it again. I need opening stock and I need units of opening stock. I need purchases plus my purchases plus my units of purchases. I need my returns, the rand value, and the units of the returns. Returns must be subtracted. And then I need my import duties, the 24,000 must be added. Then I do my calculation to get my weighted average price. Once I have my weighted average price, what is the closing stock for hockey balls? 440 units. Then I'd say weighted average price that you've calculated times 440, and that will give me the value of my closing stock. You have 5 minutes. Okay. All right. Let's look at our answer. I'm going to start with the final answer so that you can check yourself, right? It's always nice to see that you've calculated the correct answer. So the correct answer for this one is 40,480. So well done if you got that answer. And can you see, if you know the formula, how easy it is to get all the information from your question. And this question is not asked in a different way. It's always asked like this. So you must know where to get your information and what information you need, right? So let's look at our calculation. I said to you, above the line, I will have my opening stock, 39,180. And I will have the units associated with that opening stock, right? So 640. I like to remember it like that because then it's easy for me to understand, right? Then I have my purchases, 174,300 plus the units of the purchases, right? 1850, right? Then I have my returns minus my returns. My returns was given to me at 36,000 here. And then the units of the returns was 300. Okay. And then I had my carriage here as well, plus 24,000, right? And I said there's no units associated with the carriage or the import because it is based on this 174,000. So 640 plus 1,850 minus 300 gives me 2,190. Can you see that was also given to you on the question paper, right? So it wasn't necessary for me to do it, but I do it so you can see where all this information comes from, right? Then the opening stock plus the opening stock, 39,180 plus 174,300 minus 36,000, right? It gives us 201,480. Okay. Then 201,480 divide by 2,190 and it gives you 92 rands, right? As your average price. So 92 rands times the units on hand, which was 440. 92 times 440 gives me 40,480. There you get 5 easy little marks by just knowing this formula over here. Okay. Then we have the next one, the stock turnover rate for 2025. What is your calculation for your stock turnover rate? I have cost of sales over average stock. Now I'm going to find that information. To get average stock, I need my opening stock. So average stock here, 39,180 plus that amount plus 40,480. Then you will say divide by 2 or times half. That gives you average stock, right? Cost of sales. Remember, what is the formula for cost of sales? Opening stock plus purchases minus your returns plus your carriage, right? So now from my calculation above,
I have 201,480 minus my closing stock. Okay. You can now rewrite everything, but you are not going to get marks for rewriting everything. Once you've calculated it above, you must know that calculation. I must use it down here again, right? So if you ask yourself, where did I get 201,400? That's why I wrote it there for you so that you can see. If I take 39,180 plus 174,300 minus 36,000 plus 24,000, it gives me 201,480. And what is the cost of sales calculation? Opening stock plus purchases minus returns plus carriage minus closing stock. Where did you calculate closing stock? In 3.2.4. Now that same answer comes down. And if you bring your answer right or wrong, that's what when we call, I get a method mark for that, bringing that answer down. So that's why it's important. Let me just fix here. 40,450. Sorry, 480 is correct. So 39,000 your average stock, and then you do your calculation, right? Do your calculation for me quickly. And the answer says 4. 4 times or 4. So 201 minus that gives you 161,000, right? 161,000 divided by your average stock, 39,830. Do the calculation, it gives you 4 times. Also, when you do your calculations, if you're going to write R4 there, which means it's 4 rands, then you will not get this answer. Or you write 4%. So it's very important when you do your ratios or your financial indicators that you know what format your answer must be on, right? Now, the second part of this question, comment on whether the stock turnover rate is acceptable for this business or not. We are talking here about hockey balls. Can hockey balls go out of date? Can hockey balls go rotten? Can it? No. So then 4 times is acceptable for this product. Remember I said to answer whether it's acceptable or not, you look at this specific product. Can something happen to the hockey balls? Not really, right? It can maybe get stolen. So I would say we mustn't have too much of it because of the risk that it can be stolen. But can hockey balls get out of date? Hockey ball is hockey ball. I'm sure the same hockey ball that your brother used in grade 1 is the same hockey ball that you're going to use in grade 7 or grade 12, right? So hockey balls are hockey balls. If we buy them, we sell them. So 4 times a year is not a bad stock turnover rate for this because the stock cannot get outdated. Or another example of that is winter clothes. You cannot have winter clothes, let's say a lot of winter clothes that will last, let's say 100 days, or let's make it 150 days. That's almost the whole year, right? Stores are now bringing back winter clothes now. And the winter clothes will only be in the store for, let's say, April to September. Here by August, they have sale on it to get rid of the winter clothes again, which gives us about 4 months of having that stock. So we expect that stock to move now in this period, right? So if you have stock too long, we're now looking at stock holding as well when we're talking about the stock turnover rate. If you have too much of stock of a particular product, then you run the risk of not selling all your stock, and then you can't keep it for the next winter because then that style is maybe out of date, right? That's why people have a lot of sale to get rid of that stock. So why am I talking about these things? I want you to think. If they talk stock turnover rate or stock holding period, look at the type of product that you have. Is this acceptable for this product that you have? Because they talk about shelf life. Then we do not even understand what does shelf life mean. Shelf life, let's say bread. Shelf life of bread is maybe a week. Bread cannot stay in a store for more than 1 week. Then if I go to the store and I'm very particular, remember we learn about these things. We look at the expiry dates on bread and food and so on. So if you go to a store today and you see a bread for 28 April, today is 25 April. You might not want to buy that bread because Monday, Tuesday, the bread is not going to last. And we're only going back to school on Tuesday again, right? Look at the product, and shelf life means how long the product can survive. And there's information at the top of a question where they will tell you the periodic inventory system is used. Maybe they'll tell you FIFO is used. And then they'll also tell you the shelf life of this product is 7 days, 50 days, 54 days. Use that information. It's not given to you without a reason. They're going to ask you later whether this is acceptable or not for this particular product, right? So look at your product, look at and think relevant. Like I said, tomatoes can't last long in a business. So tomatoes can't have a shelf life of 100 days because it's really not going to last in the business. Or it can't have a stock turnover rate that's tomato stock turnover rate must be very fast because it cannot last in the business, right? So 4 times is slow. You agree with me? 4 times is slow, but it's acceptable for the hockey balls. Why is it acceptable? Because hockey balls are less expensive than cricket balls. Okay, like I said, hockey balls cannot become outdated. It's out of fashion, or they have a long shelf life, and it's a durable item. Okay, a hockey season only lasts for a part of the year, so 4 times is actually a very good turnover for the hockey, right? Because hockey, I'm not sure, I think it's a winter sports that they play in the winter. Okay, all right. So are we good on that one? So shelf life means how long a product can survive on the shelf or in your business. And you look at the product, the type of product when you answer this question, right? So comment on the stock turnover rate. If it's acceptable, the correct answer here, hockey balls cannot become outdated or out of fashion or expire. It has a long shelf life, right? It's a durable item. The hockey season only lasts for part of the year, so 4 times a year is actually good for the hockey balls. Okay, are we clear on that one? Second part of this question, explain why the weighted average method is best suited for this product. Remember, we said hockey balls are less expensive, right? We can buy a lot of hockey balls. We can buy it in large quantities because in the previous question we said it has a long shelf life, right? The prices, you saw the average price that we calculated was 92 rand. So it's not an expensive item. We can buy a lot of hockey balls, right? So answer for this one, hockey balls are less expensive than cricket balls, cricket bats. It could be bought in large quantities and it can be difficult to keep track of the hockey balls, right? I know we have different prices, but more or less, they are more or less the same, these hockey balls, right? 3.2.7, we didn't read this one, so let's read it together. Penelope found out that the shop manager, Pitty, changed the supplier of hockey balls in February without informing her. He imported hockey balls from Japan and paid import duties on purchases. Penelope is not happy about Pitty's decision. State 2 points and provide figures to support Penelope's opinion. Now, before we answer this one, let's go back to the question to see what information we have to answer this question. If you look, it says, they changed the supplier, Pitty changed the supplier in February 2025. So this question relates to the February purchases because remember, in February, we had now a new supplier, right? So if you look at the February purchases, we bought 600 balls and the returns on the February balls was 300. So 50% of the balls were returned.
So your answer would be the first one. We purchased 600 balls and we returned 300 balls, which means these balls are a bad quality, because if you look at other months when we bought 450, 360, 450, we did not have so many returns. So the balls was a bad quality that we bought, right? Also, if you look at the purchase price increased to 120. So with the first price we are 75, then 80, then 90. But now from the new supplier, we paid 120, which is 30 rands more. We can even calculate and say there was a 33% increase in the purchase price, right? And we had to pay import duties of 24,000 on this February purchases. So it wasn't a good idea to go to the new supplier because the price increased with 30 rands. And they say import duties on purchases of hockey balls during February amounted to 24,000. Import duties is not included in the purchase price. So already that 24,000 that we did not have from other suppliers is included in that. So it wasn't a good idea, right? So one, the returns, the 50% returns. Two, the 30 rands increase on the purchase price, and also the import duties that we had to buy. And normally, if you return goods, then import duties is not refundable, so that will also be a loss for the business, right? So those are your answers that you can give for that answer. Let's go over it again. We bought 600. We returned 300. 300 over 600 gives me 50%, right? Then the last November, the balls were 90 rands. Now in February, the balls are 120. 120 minus 90 gives me 30. 30 rands increase on the balls. When you answer a question like this, guys, use figures. You just answer. They say to you in the question, provide figures to support Penelope's opinion. You would state 2 points. You say balls were returned, but you don't say how many balls were returned or what balls were returned, which means you only get 1 out of a possible 2 marks. So make sure that if they say provide figures, that you use the figures that's on your question paper in front of you and do the calculation. Like I said, 300 over 600 gives me a 50% of balls that was returned. So it was a bad quality balls, right? 90 over 120. 120 minus 90 gives me 30. 30 rands more that I'm paying. Work it even as a percentage out. That will even strengthen your answer better. But don't just say also returned, price increase. How much? Be more specific in your answer to make sure you get the full 4 marks for this question. All right. Let's go to the second part of 3.3. 3.3, Qualte Camping Store. You are provided with information from the books of Qualte Camping Stores for the year ended 28 February. Here's the information on tents, chairs, and tables. We're only going to focus on tents. Look at the information and see what differences you see there. You see orders received, there's a difference. Units sold, difference. Returns by customers, actually better. Stock turnover rate, decreased a little bit. Selling price, there's the selling price, 2,400, it increased to 3,060. There's your first point, because he had to decide. Remember, orders received from customers, he doesn't have an influence over that, right? Units sold, it doesn't have influence. Returns, but this question says, what decision did he take? He can decide the selling price must increase from 2,400 to 3,060. So he increased the selling price, right? Cost price doesn't have much. Gross profit, it can't control that. Then look at the markup. The markup was 60% in 2024. Now the markup is 80%. So he decided to increase the markup from your figure 60% to
80% or by 20%, right? So your answer here, first one, he decided to increase the selling price from 2,400 to 3,060. He also decided to increase the markup from 60% to 80%. Easy 2 marks for you, right? Let's go back to chairs now. 3.3.2, why was it not a good idea for Quality to change to a cheaper supplier of chairs? Explain 2 points and provide figures. So now we're looking at chairs. Remember, it's gone to a cheaper supplier. So my first thing I'm thinking, is the supplier giving me quality goods? Where will you see about quality goods? We will see that by returns. Look, in 2024, our returns was 0. Now in 2025, the returns was 80. So that can be your first answer, right? The returns increased from 80 by customers to from 0 to 80. Then stay 2 point. But if I look at looking at chairs, né? Let's look at this gross profit here. The gross profit in 2024 was 148,000. It's now 123,200. So the gross profit also decreased, right? Let's look at the sales. The orders received from customers was 1,200. It's now 1,180. So was it a good idea? If you even look at the units sold, it was 1,200. It's now 1,100. So everything points to a negative direction, that it wasn't a good idea to change to a cheaper supply, right? Mostly, I would say start with that returns, because immediately that you can see the new supplier is not giving better quality that customers are satisfied with, right? Let's look at the tables quickly. 3.3.3. Quality reduced the selling price of tables in the 2025 financial year in response to a new competitor who sells the same brand of tables at 1,150. Based on the information below, provide 2 separate suggestions with figures to Quality on how to improve the profit on tables in 2026. Okay, let's look at the tables information. It's fine. Okay, let's look at the selling price first. His selling price was 1,326. The competitor's selling price is 1,150. Then in 2025, his selling price was 975. So he should increase his selling price to anything between 975 and 1,150, right? So it must be more, so it can be in line with his competitor, right? If you look at his markup the previous year was 70%, but now his markup is only 25%. So he should also increase the markup to maybe 50%, or just say any amount between 70 and 25%. He can increase that, right? Can you see? I'm not looking for answers above from the sky, from the classroom. I'm looking at my information. What is the table telling me? The information in my table on tents, chairs, and tables. Is it giving me information so that I can use that figures to answer this question, right? If you look at orders from customers, he had 650, now we at 975. Okay, so improve the stock turnover rate, maybe have sales that he can improve that, right? Units sold 650, 755. If you look at his orders received, he received 975, but he only sold 755, which means he's not doing well in terms of the orders from the customers. So he must work on that, because then he can sell more goods, right? So what I'm basically saying is, look at this information in your table. Don't look for answers out there. You guys always think these theory questions are difficult. But if you look at your information in the question, then you will find all your answers there. Okay, and these questions unfortunately will always be there, and it's this type of questions you guys like to calculate, but these are the type of questions where you can get marks, right? In June, we're going to write a full paper 2, a full paper 1. You've seen last year in November a full paper 1, a full paper 2. So be prepared. Make sure you understand this topic very well, because this is where you can gain marks. And also, like I said in my introduction, stock can be asked in paper 1 as well. In the income statement, which used to calculate the trading stock deficit or surplus, or in the balance sheet or your statement of comprehensive income or your statement of financial position, where you have to calculate the value of your inventory, right? So be mindful of that. Do not neglect this topic. It can be a topic that can really get you easy little marks. I hope today helped you a lot. Good luck, and I hope you will be successful in this term in all your subjects, but most importantly, your accounting. You know, that is my baby. So I hope you're going to be successful and work hard. Give it your all in this year.